You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back. Today, we're really digging into what's shifting in fintech and the financial markets right now. We've gone through the sources you care about to pull out the key insights, trying to give you that shortcut to being genuinely informed without getting swamped.
Absolutely. And it's a particularly busy time. You've got major players heading for public markets, new tech popping up, and, well, some real market challenges to figure out.
Okay, so let's unpack some of these high-stakes market moves first. Chime, the challenger bank, is eyeing an IPO. The target valuation is reportedly around $11 billion.
Right, which is interesting because, that's quite a step down from their peak valuation back in 2021, wasn't it? Around $25 billion.
Exactly. But the recent numbers look okay. Q1 revenue was over $500 million, and they actually posted a small net income, about $13 million. Plus, you've got the big banks involved, Morgan Stanley, Goldman, JP Morgan leading it.
Yeah, that backing is significant. It signals, I think, a shift in the market. It's less about pure growth hype and more about, okay, show us a path to actual profit. And speaking of IPOs, Circle also officially filed.
Ah, yes, the stablecoin giant.
Right. They're looking to raise maybe $624 million, valuation somewhere near $6.7 billion, trading as CRCL on the NYSE. They're really positioning themselves as like foundational plumbing for digital dollars. Got interest from ARK Invest, BlackRock.
Big names there, too. And staying with strategic shifts for a second, Global Payments sold off its payroll and HR unit.
Yeah, to Acrisure. That looks like a clear move to just, focus back on their main payments business. Still brings in decent revenue, about $100 million a year, but it streamlines things for them.
Okay, so beyond the big company moves, what about the underlying technology, the financial plumbing, so to speak?
Well, Stripe's been making some moves there. They've rolled out enhancements for their money movement tools.
What does that mean exactly?
It means platforms using Stripe can more easily send, receive, hold funds globally. Think instant payouts, global disbursements, even sort of embedded wallets right within the platform. The big idea is to cut down on the complexity, the regulatory headaches, make global money movement smoother.
Right, democratizing it a bit.
Exactly. And if you connect that to data access, Plaid's doing something similar. They're expanding their business banking data coverage across, thousands of U.S. institutions.
Okay, and that helps. Who?
Fintechs that serve small and medium businesses, mainly. It gives them much better access to commercial account data, which means they can do better underwriting, get deeper cash flow insights. It's really enabling for that whole sector.
Got it. And, I've been hearing this idea lately that stablecoins aren't just a payment method anymore, but more like a new platform.
That's definitely the emerging view. It's not just a rail. It's becoming an infrastructure layer itself.
Wow.
Actually, CD Insights just put out a market map, identified something like 172 companies, really driving that stablecoin ecosystem forward. It shows just how fast it's growing and, becoming foundational.
Okay, here's where it gets maybe a bit more futuristic. AI agents. There's this concept floating around, I think, from A16sters, that AI agents will need wallets, not checkouts.
Right. The idea is that these agents will handle tasks, fulfillment, directly through APIs, probably with preset rules or constraints. So they need a whole new payment stack that's secure, programmable, built for agents, not humans clicking buttons.
But that brings up the trust issue, doesn't it, with AI and finance?
It does, and that's a big focus. We're seeing a shift towards making AI systems more transparent, explaining why they make a recommendation. The goal seems to be using AI to, deepen the human connection and build confidence, not just replace people outright.
Is there a good example of that happening now?
Well, Virgin Australia is doing something interesting with Hopper Technology Solutions. They're using AI for fintech features, like offering cancel for any reason, or flight disruption guarantee. It gives travelers more control, builds loyalty, uses AI to enhance the customer experience.
Okay, so lots of innovation, new infrastructure, but what's the overall market climate like?
Well, it's a bit mixed, actually. On one hand, global fintech funding has dropped quite significantly. It's apparently at a 7-year low. That's sparking debate. Should founders bootstrap or still chase VC money? It's a recalibration.
And other challenges?
Yeah, climate risk is starting to bite. We're seeing reports of banks and some fintech lenders, too, halting mortgages in certain California wildfire zones. The risk, the insurance costs,
No, they're just
getting too high. They're using climate data much more now to assess property risk. Creates a tricky situation.
And regulation, always a factor.
Definitely. There's pushback from major fintech groups on new state-level rules for buy now, pay later.
Yeah.
They argue it creates a patchwork of confusing standards, might stifle innovation. They're pushing for a federal approach instead.
That tension between state and federal rules.
Exactly.
Yeah.
And also, traditional credit scoring, like FICO, is under more scrutiny. People are asking if it creates barriers, especially for those with limited credit history. So lenders are exploring, alternative ways to assess risk, trying to be more inclusive.
Okay, just a couple of quick leadership notes we saw. PayPal Ventures has a new managing partner.
El Moya, yeah.
And Coinbase has this interesting internal venture model.
Right, the incubated base, their layer 2 network, almost like an internal startup. Interesting approach.
So wrapping this up, it's clear there's just incredible dynamism, IPOs, reshaping valuations, the actual plumbing of finance evolving, AI coming in strong, but also real market challenges and regulatory debates happening.
It really is a period of intense change. And maybe, thinking about all this, the AI advancement, stablecoins becoming infrastructure, here's something for you to chew on. How does the very definition of a bank need to change in the next, say, 5 years, just to stay relevant in this new landscape?
That is a big question. Definitely something to think about. Thanks for joining us for this analysis, and we hope you keep exploring these topics.
You've been listening to The Vocal Technologist. Tune in next time.